Breaking economic news. Well, it's not economic news of the hard data variety. It is a survey of purchasing managers about how they see the economy faring. The executives that purchase pencils and desks and computers for corporations. The survey results are published as an index, and in October, the ISM Manufacturing Index slipped a tenth to 50.1 in October from 50.2 in September. It is very close to the 50.0 line that divides an expanding manufacturing sector from one that is in outright decline. If it were to fall to 49.9, it would mean a declining manufacturing economy. And it is a leading indicator of sorts, but don't confuse 49.9 with a serious economic downturn or something that might delay a Fed rates liftoff on December 16. The Institute for Supply Management has a special level in mind for a recession signal for the overall economy. The index at 50.1 today has to break below 43.1, which is a long way away from here. This is not a report of serious weakness in the U.S. economy. In fact, the ISM Manufacturing Index for new orders and production were up strongly. New orders jumped 2.8 points to 52.9. Production rose 1.1 points to 52.9 as well. It is employment that is the big drag today, tumbling 2.9 points to 47.6 in October from 50.5 in September. And before you start wondering whether this means payroll jobs are going to be weak on Friday, think again, as this index just covers manufacturing. About 8% of all jobs out there in the U.S. are in manufacturing. We still expect payroll employment to rise 200,000 on Friday for October after slower readings of roughly 140,000 the last 2 months. Net, the ISM Manufacturing Index fell 0.1 to 50.1 in October. The employment component got some notice, falling 2.9 points from 50.5 to 47.6, but stocks did not care. Dow Industrials were up 73 points at the 10 o'clock ISM release time and are up over 100 points currently. All this employment index signals to us is that it is catching up to actual declines in manufacturing payroll employment the last 2 months. The real number from the Bureau of Labor Statistics, not anecdotal survey information from purchasing managers. Manufacturing employment fell 18,000 in August and 9,000 in September. We will see what happens with non-farm payroll jobs and the unemployment rate on Friday. The outlook? There are 2 more monthly employment reports before the Fed meets on December 16. Our bet is the unemployment rate will fall from 5.1 to 4.9% by the time they meet, and so meet the Fed's criteria for liftoff. Rate hikes are coming starting this December. Bet on it. The economy is stronger than you think.